Hi, my name is Phil Richards from BFCA, and I'm just recording a quick introduction to our series on IR35. My apologies for the casual dress, but it is Friday here in the office. So our series on IR35 goes through what IR35 is, how to test for your IR35 status, and also, more importantly, how to prove that you are outside IR35 and how to keep that evidence safe. So I hope you enjoy the series, and thank you for listening.
Firstly, what is IR35? IR35 is legislation that's contained in Chapter 8 of the Income Tax, Earnings and Pensions Act 2003, or ITPA 2003 for short. The legislation interacts with other HMRC legislation also. Chapter 7 of ITPA 2003 is the agency legislation, which basically says that if an agency engages a worker, then the agency must apply PAYE unless the worker is engaged through a limited company. IR35 says that if a worker who's supplying a service personally is a disguised employee of their client, then that worker should suffer tax and national insurance on the same basis as other employees. So this legislation ignores the fact that the worker may be working for their own limited company and focuses on the arrangements under which the worker is supplied, a hypothetical contract between the worker and end client. The IR35 legislation applies when a worker is engaged through a limited company and the worker and their associates has a shareholding of 5% or more. If the worker is working with an umbrella company, then they will not own 5% of the shares, so IR35 does not apply, but the agency legislation does still apply. In effect, what this means is that any professional contractor and freelancer who runs their own limited company should be aware of this legislation, as it does apply not just globally to their business, but for each and every engagement that you take on, whether direct for a client or through a staffing company. So the legislation needs to be looked at on a contract-by-contract basis. The effect of a contract being caught by the legislation is that the intermediary, which would be your limited company, is required to calculate a deemed payment on which PAYE and national insurance is applied. This is how the legislation aims to ensure that for any contract caught by the legislation, tax and national insurance is paid to HMRC on the same basis as if the worker were an employee of their client. So how would you know if a particular contract is caught by IR35? For a contract to be caught by the legislation, it needs to be shown that the circumstances are such that, if the services were provided under a contract directly between the client and the worker, without the worker's own company or a staffing company or agency in the middle, the worker would be regarded for income tax purposes as an employee of the client. This is an important point to be remembered. A contract caught by IR35 is one where the engagement is one of employment. This would be a contract of service. Therefore, a contract that's outside IR35 is one where the engagement is not one of employment. This would be a contract for service. For the sake of clarity, there's no need to prove self-employment for the contract to be outside IR35. You just need to prove that this particular contract is not one of employment. This difference is slight, but vital. So to summarise, IR35 is part of tax law. A contract will be caught by IR35 if, but for the limited company or staffing company in the middle, the worker would be an employee of his or her client. And it's the responsibility of the limited company director to decide whether income is inside or outside IR35 and to make the appropriate returns. That's the end of this video. The next video in this series looks at how you should test to see if a contract will be caught by IR35 and introduces the factors that HMRC look at when they consider whether or not a contract's caught. Thanks for listening.